What's up, everyone? Welcome back, and we are doing it right this week. We don't have a box around my face. I turned off the autofocus that nobody told me last week, so here we are now doing it right. So today we're going to be talking about a couple of key things. One is the feeling of being rich. I know this is something that I've talked about in a couple of my previous videos, but it's something I want to bring up again based off of some DMs and some messages I've been having with viewers just like you. And then we're going to get into about the second wave of infections or COVID-19 that's popping up. And then we are going to get into the market correction that we saw this last week that was finally here. It took a while to come back, but we'll talk a bit about that. How retail investors are changing the marketing environment and the investing environment. And then also how Airbnb had record bookings this last May compared to the previous year. And then last and not least, we are going to value Tesla. Well, I'm going to try to value Tesla because it's a very fast growing company and usually they don't have the numbers, but we're gonna play around with it. We're gonna get kind of crazy. We're gonna try to value Tesla. Now I got my smoothie, I got my bowl of popcorn. Let's see, hopefully it just doesn't get too annoying me chewing into the mic. I'll try not to chew into this. Other than that, let's get started today. Let's make sure that everything's working. What's going on, M-A? All right. So as we get going here, please, my chat screen's over here, camera's over here, notes and all my spreadsheets and stuff are over here, which speaking of which, I need to get my spreadsheet up. Write comments or write questions in, and as soon as I look over here, I'll answer them the best I can, okay? But first things first, let's get going. This is one of my favorite times of the week, to tell you guys the truth. Where did I put that spreadsheet? Just sitting here talking with you guys and being able to flesh out everything I've digested throughout the week. Market, international, the economy, what's going on, be able to come for an hour. I say an hour, it's usually about 2.5, 3. But all right, let me get this up and running. So first things first is we're starting off a little bit different this week where we're not jumping right into the market, but we're talking about something about feeling rich. And this is something that it's kind of like the American this feeling of freedom or the ability to have freedom and make choices. And feeling rich is exactly what it sounds like. It's a feeling. And there's two key ways of getting there. And I'm talking about this from experience of being able to do both sides. Now, obviously, my scale is very different from other people's, and it's probably very different from yours. But this is my perspective here, is that there's two ways of feeling rich, okay? One is you increase your income, and then two is you decrease your expenses. And in business, what that's called, sorry, let me move this so I don't keep on kicking this throughout the whole live stream, is that it boils down to what is called operationally leveraged, okay? That's the fancy MBA business jargon. And operationally leveraged means that you have your all of your company or your business is all set up so that your fixed period costs or your variable costs are really low and your fixed period costs stay the same. And essentially how that translates to personal finances or my finances is I shrink my fixed period costs as low as possible. And then my variable costs is low too. I shrink that as well. So what that does is that it allows you to make relatively a low amount of money, but you still feel rich. And the great thing about focusing on expenses rather than income is that it's easy, it's actionable, and you can do it literally right now if you wanted to, right? You can go cancel subscriptions, you can switch phone carriers, you can change insurance companies, you can do all this stuff basically within a week. It's harder, it's not impossible, it's just more challenging to increase your income or your investments and see that money coming in really fast. And if you do that, just like how income and investments compound over days, weeks, months, years, expenses do the same. So for example, for me, when you reduce your expenses or when I reduce my fixed period costs, right? The fancy business jargon again, my fixed period costs, so living expenses, my insurance premiums, my cell phone bill. When I reduce those as low as possible, what that allows me to do is my costs of living are down here. And even if I make a very median average salary of like, let's say $50,000 a year, $45,000 a year, because of what I have to pay out in expenses. Now you can imagine how fast this builds up or grows as my income increases, right? So if I go from 45,000 and let's say I jump up to 60,000, right? But my baseline or my expenses are down here. I just basically cash flowed or increased $15,000 into my bank account. And then what if I go from 65,000 to 100,000? That $35,000 spread goes straight in the bank account. It doesn't go to pay more expenses. It doesn't go to pay more interest. It doesn't go to pay new subscriptions or new toys. And what that allows you to do is you start to feel really rich because all of a sudden you're living at a certain lifestyle. And for you guys who've been watching this channel for a long time, you guys know, and I'm very transparent about both my wins and my losses, is that my win is that I can live off of, or my fixed period cost is roughly $10,000 to $12,000 a month. Or sorry, that's a lot of money. It's not $10,000 to $12,000 a year. So roughly about $900 to $1,000 a month. So for me, if I make $12,000 a year, I pay my taxes, I pay my cell phone bills, I pay my car insurance, I pay for my utilities, all that stuff that I need to do to survive, my food, my groceries, all that stuff. Everything over $12,000 falls straight into my investment accounts. It falls into my traveling funds. It falls into my play fund. And so you can see if I make $24,000 a year, which is a very low, I think that's not poverty. That's not below the poverty line. I think poverty line is 16,000, but $24,000 we can agree is a very low amount of money. It's about $12 an hour. I feel rich. If I make $36,000 an hour, which is starting to get into the median of the United States, I still feel rich because I'm basically saving $2,000 a month. Now, once you add in properties, you add in potential income, all this other stuff, and I make over six figures, but my expenses are still at $12,000 a year, you can see all that money, that spread, goes directly into my bank account or investment funds or wherever I want it to go. And so where a lot of people in America wouldn't consider making $65,000, $75,000 as considered rich or even wealthy, I would say for me, I can travel, well, not right now, but I can travel around the world whenever, however I want. I can buy basically anything that I really need within reason, right? I'm not gonna go buy a yacht or anything, but I went and bought, just last year, you guys know I made a video about, I bought a brand new Tesla. I still have my truck. I buy properties. Basically, I can do whatever I want to do because my expenses are so low, but I don't have this outrageous, I'm not like nowhere near Zuckerberg, but I don't have this business that's spitting out millions and millions and millions of dollars a year or even tens or hundreds of thousands of dollars a month. It's all about expenses. And in business school and just basic fundamentals like we talk about, when we look at all the businesses that we value, we look at the fundamentals of business, and the fundamentals of business is always, don't let anybody tell you anything different. A lot of times it works because they go against the grain, which is fine, but fundamentally with a business, you always look at expenses first. Well, no, you look at your customers first, but to run the fundamentals of the business, you look at expenses and costs first, and then you work from there. Make sense? So focus on feeling rich by not focusing on your paycheck. It's really easy to look at your paycheck and get discouraged by taxes that are pulled out, your 401k contributions, Social Security, all that stuff, right? But what I want you to focus on is something that you do have actual control over in the immediate future. That's your expenses, your HBO Go subscription, your Netflix subscription, what are those, like those Freshly, all those subscription food choices, or like Crate Box and all that stuff. Those $15, $20, $30 a month, get rid of those. Your gym membership, definitely go to the gym, definitely work out. But if you're paying $60 for the gym membership, maybe spend $60 on some kettlebells and watch some YouTube videos. That's your workout. And that's actually what I've been doing. Beachbody, actually. It actually works really well. All right, let's jump over here. I'm gonna get some, if I'm drinking this and eating my popcorn is really annoying, just let me know. What up, Ray Ray? What's up, Zach's Apps? Jen A, welcome. Oh, sorry, by the way, I forgot to tell everybody, this is on a Saturday, and I should be doing this on a Sunday, but like you guys know, I'm remodeling and I'm updating the house right now, so I do this whenever it's raining. And of course, the last, 2 or 3 weekends, when I started doing this, I try to time it around the weather, and right when I start, it's clear skies and it's not raining. So I totally could be working right now. quick question from Ray. Ray, what do you think about stocks? Will they roll on as usual? Will it drop even more? We're talking about that today in a little bit, but to tell you the truth, the correction was we were overdue for a little bit of a correction. That was the biggest drop that we've seen since March. Single day drop. It was just I think it was 7% on the Dow Jones. I can go either way. Last week I said I was wrong about the market, and I could be. And right now it's really funny because of how involved the Federal Reserve is. And so they keep manipulating and playing with money reserve, or not money reserves, but how much U.S. dollars are out there in the world or in the U.S. economy, that it can really send our market anywhere. And interest rates are so low that there's so much money entering the market right now. And we're going to get into this a little bit too, is retail investors. You and I, who use Robinhood, Webull, SoFi, which are all great apps, links in the description, if you want free stocks, is that it has completely changed the market from maybe even 5 years ago. Completely changed. And so people like you and I, retail investors, we carry a lot of weight. It's not just these big hedge funds and these big investment banks or investment firms that are swaying the market with buying big stocks. And I'll give you a couple of examples later. But to answer your question, Ray, I personally think that in the next 24 months, it's going to be very difficult for the market to keep this up. And the reason behind that is because I'm a value investor. I'm a fundamentals guy, right? When I analyze businesses, I look at the numbers. And if you tell me that a company is used to making, I'm going to make up some numbers here, $2 a share, and we all know that in the next foreseeable, say 3, 4, 5, 6 quarters, is that because of the shutdowns, the quarantine, the lack of businesses going out there, being open only at 40% capacity, is they're no longer going to be able to create that $2 a share. They're only going to be able to generate $1 a share or 80 cents a share. And what that tells you is that therefore the stock should go down, right? You used to be making $2 and now you're making $1 for the foreseeable future. And we don't know what's going to happen next. However, because of retail investors and because of how the market works, and because of low interest rates, and because of potentially inflation, foreign dollars entering the U.S. market, it could, and we are seeing it right now actually play out, is even though companies are making less money or no money, actually even worse than that is they're losing money, we're seeing their stock prices go up. Not just go up, but hit record highs. You guys understand that? Their profitability and cash flows have gone down, and not by 2, 3%, 4%. We're talking about 30, 40, 50, 60, 70%. Yet prices, or the stock prices, continue to go up and hit record highs. Not for everybody, but for a lot of people. And I'll touch more on this in a little bit. Ray, just think about this. The S&P 500, the top 5 companies, let me see if I remember this. Microsoft, Facebook, Apple, Amazon, and what's the last one? It's a big one. Apple, Microsoft, Amazon, Facebook. Oh, this is going to kill me. Anyways, those top 5 tech companies, Google, Alphabet, they are up for the year. They're up 15%, okay? 5 out of the S&P 500. The other 495 companies are down -8%, okay? So the top 5 companies are boosting up the entire S&P 500. 5 companies are out-representing the other 495 companies. And if you guys just don't know this, how the S&P or how any index really works, it's basically they take the stock prices of all the companies inside the index and they just divide it by the number of companies in there. So for example, the S&P 500 takes all 500 companies, adds it all up, divides by 500. It's just an average. And so what ends up happening is that these big companies, they can skew the reality of what's happening. So, and then that will lead into retail investors here in a little bit. But Gen F and Gen A, what's up? Steve Lozano. Did you see the looming banking collapse article in Atlantic? I read the Atlantic, Zach. I did not see it. Send it to me, will ya? Looming. I'm gonna add that. I wanna look into that. I'm gonna add this to my notes so we talk about it a little bit later. Looming banking collapse. I can't spell right now. I got so much sleep last night, you guys. I fell asleep on the couch watching a Netflix special, comedy special. I usually sleep only about maybe 6-7 hours a night, and I usually wake up like super early, like 6 o'clock, get ready. I crashed at like 10:30 last night on the couch, and I got woken up by my girlfriend at 9 o'clock this morning. My whole body's sore. Okay. Google. Yep, thanks, Ray Ray. Looking. Banking collapse. Okay. If you get a chance, send me that article, Zach. Okay. As you guys have known, if you guys are watching YouTube, obviously, and you guys have been looking at any type of news, we are here in the midst of the second wave. I think maybe I have it recorded. Is during Memorial Weekend, I was saying like it's gonna be very interesting in 2 weeks to see what happens because you guys know the virus takes about 10 to 14 days to incubate and for symptoms to start coming out. It's gonna be very interesting to see what happens 2 weeks from Memorial Weekend. Boom. 22 states see huge spikes, like nearly 40, 50, 60%. Not just in cases, right? Because cases can be skewed a bit. It's like how many new tests are you putting out there? Who are you testing? That type of thing, right? Okay. But it's not just the numbers of cases that are coming up. It's the hospitalization rates. And remember, because I listen to any of these, we go back and I always tell you, focus on the right numbers. And especially when it comes to investments, there's so many different numbers to look at. Your job as an investor or as an objective, remember, talked last week about critical thinking, an objective citizen of the world, citizen of the United States, is focusing on the right numbers and not letting the media or other people who have agendas to lead you into a direction that may not be well suited for you or keeping you misinformed, okay? So, yes, so cases and tests, I kind of hold that with a large grain of salt. But, however, when you start looking at hospitalization rates, that's really important. And what we're seeing right now is an increase, a very drastic increase in numbers going to the ICU. And then obviously it's related to the COVID-19 thing. And so now we're starting to see a resurgence, especially in Arizona and Texas, including my state, where numbers are actually so much higher. There's such a huge spike that my state, literally the day, 4 hours before, I have a bunch of friends that are business owners, own restaurants, gyms, that type of stuff. Literally 4 hours before they're supposed to open, governor says, stop, pause, no more openings. We're putting everything on pause for a week to reassess what's going on. And then perhaps maybe we might have to pause this indefinitely if numbers keep going up. Guess what? Numbers are keep going up. So it's the second wave is hitting us, and I think a large part of it is that I don't think it's the masses. I think what ends up happening, and I was just having this conversation with my girlfriend, is that you have a minority group who don't really follow social distance laws. They still go to nightclubs. They're crowding up on beaches. They're hanging out with friends again. I do jiu-jitsu. I go to the gym and stuff like that. And like I have friends that just do jiu-jitsu. If you guys know anything about Brazilian jiu-jitsu, you're literally sweating, bleeding, and coughing in each other's faces. But you're breathing really heavily on top of people, right? Literally on top, like you're wrestling. And I have a bunch of good friends that I know that are doing this, right, with a lot of people, which is not helping curb the spread. And that select small group, even if 85% of us are all following the rules, that smaller group of 10 to 15%, by them doing that, it really ruins the party for everybody else. And that's what we're seeing. And that leads into what we're seeing here in the market. Now, if you guys have, let me see, I'm just pulling up this. Where did I put that article? I lost it. Oh, nope, it's right here. So the Dow last Thursday, which was basically 2 days ago, had the single largest drop in, I guess only 3 months, which is crazy. 7% drop. Because based on the news coming out about these spikes in states. And the thing that I really want us to remember is that the stock market, you guys, it's a voting machine that's always forward looking. It looks into the future. That's why the stock market doesn't reflect the economy. And everything that we do on this channel and everything that I try to do with you guys is let's look at the business fundamentals and see when we do these forecasting out. I know you guys can't see my screen right now. But when we do this forecasting out, we're forecasting out in the future. Minimum 5 years, but a lot of them are 5, 10, maybe even 15 years out, right? We're doing it fundamentally. We're doing it with actual like math and science, maybe not science, but math and like business fundamentals to see how companies will do 5, 10, 15 years out in the future. What other people are doing is what I call speculating. They think a company's going to do great, so they invest in it, or they think a company's not going to do great, so they pull out their money. And that's what happened in the stock market. And that's why we saw a huge crash, not a huge crash, but a 7% dip, which is substantial for our stock market in one day because some media came out saying that the second wave is coming, or some would even say the second wave is here. And it could see, I mean, Friday it rebounded a little bit, which you can expect from every correction. But we're supposed to see that. When you see a stinking bull market for, 45, 55 days straight, I forget the exact number, there's always going to be a slight correction. Now, there's a lesson from history here, and I know a lot of us are probably not this old. I'm not even this old. I was born right at the end of it. But in 1982, the numbers were very similar to what we see right now. GDP, gross domestic product, was down, and unemployment rates were really high. Not nearly as high as they are right now, but they were like around 8%, right? And for the following year and a half, GDP kept going down quarter to quarter, and unemployment rate kept going up. I think it peaked out around like 10 or 11%. However, the stock market kept going up. And the reason behind that is just like right now, the Federal Reserve got involved. And so you guys got to remember that the stock market does not reflect the economy or vice versa. And it's not the only thing, but the two bigger things is that we are in the middle of a pandemic still, and this is a global thing. Back in 1982, it was just basically a United States thing. And so being this is a global thing, and we have to deal with like second, maybe third, maybe fourth, fifth outbreaks or waves, especially think about this fall, it could really do a number on a market, and we could just see this very it's called trading sideways when you see the market go like this, but we'll see these big troughs and these big peaks. Who knows though? I could be totally wrong. But yeah, my point is that the stock market is always forward looking, and a lot of it is based on the media or what news comes out. It doesn't even, that's the weird thing that it's tough for me to put a lot of money into the stock market, is because it's based on the media. It's not based on fundamentals and future earnings. Like I love real estate and property is because I can run the numbers and it's all fundamentals. I mean, it has a little bit to do if you want to sell something. It's based on what the market is doing. But for most cases, it's like, what kind of tenants can you get? What kind of guests can you get? How much money do I need to put in? What does this square footage cost? What can I sell it for? What can I rent it for? It's very fundamentally sound. It doesn't go up and down based on the news in New York City or in Salt Lake City, right? But yeah, it's very, very interesting, which I want to get into about the retail investing here in a little bit. But let's jump back over here. What you sipping on? Time stamper. I've got a smoothie here. A fruit smoothie, some yogurt, I believe some protein powder. Sarah, my partner, my girlfriend, made it for me this morning. I woke up late. I woke up at 9, and I don't usually do that. I'm not that. But she made me a nice little smoothie. So I could build the thumbnail, get my description together, get my whole studio together for you guys. But it tastes delicious. This is my second glass, actually. I started before I jumped on. Okay, Zach, it's not letting you pull it up. I'll jump in there. Don't you have to have like a subscription? Atlantic. There's no going back to normal. I do not see it on here, Zach. Here, let me try to do it this way. The Atlantic, what was it? Banking collapse? Will the banks collapse? I think I found it. Ooh, this will not be fun for me just to read this on here. You know what? Towards the end, Zach, I'll read it and then I'll post like a comment or something. But I've heard some stuff going back and forth. I don't think banks are going to collapse. And I mean, obviously I need to read into this and get more, to give you more insight. But you guys got to remember that back in 2008, 2007, during or right before the collapse of the mortgage market, is the banks were not very strong. They had very low liquidity. They were highly exposed to these horrible mortgages. And just if you guys have any, just give you guys a quick overarching 30,000 foot view of what goes on in the banking system or investments, is banks they make money by giving out loans, right? And so they give you, like right now, for example, they give you 1% and they turn around and they loan out that money that you gave them, that you deposited, and they take it and they loan it out for 3, 4, 5%. And that spread is their profit, right? So they give you 1%, they charge somebody else 4%, that 3% spread they keep. Now, that obviously is a long-term game. It's not cash right now, because that 3% spread comes in each year. So what they end up doing is that loan itself, right, is actually worth money because there's an interest on it, just like bonds and stuff, how we trade stuff through the stock market. And so what they'll do is they will lump together mortgages, loan packages, and all this stuff, and they will sell these giant packages of thousands, tens of thousands, hundreds of thousands of different loans, and they'll sell it to each other or invest in it, right? So they're like, hey, I've got a bunch of like really strong and what do you call it? Not lenders, loans, loaners, loanees, and they all have great credit scores. You know, here it is. We'll sell it to you for X billion dollars, X million dollars, right? And so what was happening at that time, though, is that these banks, they were hiding these subprime loans that were horrible loans, right? They're hiding it inside these portfolios with a lot of good loans with like people with like good credit. And what ended up happening is that every bank, or a lot of banks, they had these portfolios that had like these ticking time bombs inside their portfolio. And so at that time of the market, you had banks with low liquidity, they're over leveraged, and they had these ticking time bombs in their portfolios. And so that allowed that financial system to collapse back in 2008, 2009. Due to regulations, due to changes in laws, due to the bailout and what they had to, these banks had to do in 2008, the ones that survived, is that they changed that. They became way more liquid. They were way more sound with their finances, and they should have, for the most part, screened out a lot of these ticking time bombs inside their portfolio. So fast forward to today, fundamentally speaking, the banks are in a much more sound spot now than before. Obviously, some of them might go a little bit out because of, people will be pulling money out. But it's not going to be as bad as the last decade, when all these banks literally had these portfolios and these loans that were worth nothing. And so I don't think we're going to see it, but I'll read this article and I'll let you know what I think. Okay, so retail investing. So as you guys know, I, on this channel, am basically every financial channel, to give you guys some insight, is I only really encourage you to invest or use products that I use or that I think that you could benefit from. So one of those things is like Robinhood, Webull, and then SoFi are 3 stock investing apps that I use. Now, I've gotten a lot of, reach out from other companies that want me to push their stuff, like I'm not going to say names, but I've had a lot of other products and companies reach out to me that wants me to push their products, and I tested or played with it or whatever, and I just didn't like them. It didn't feel right, or whatever reason, I didn't like the interface, and so I don't advertise them. And how it works is that it's a mutual benefit thing. So when these companies work with the creators, content creators like me, what they do is they give us a code, and you can do this too. Actually, it's not just content creators. Is that if you sign up, a lot of times we both get something for you signing up. In the case of SoFi, you actually get more. I think you get like $100. I get like $25 stock or something like that. So you get 100. It could change, but I know I get less than you. In Robinhood and Webull, we both get basically free stocks. I think sometimes you get 2 or 3. I get 1. That type of thing. Now, that is all really cool, because now, back in the day, back in especially 2000, 2009, when I was buying Tesla and Netflix and all this stuff, is that it used to cost me, or us, people in general, about $3 to $5 per trade. Okay? So you can imagine how fast that builds up. If you're buying and selling stocks or whatever, if you're selling say you're doing like a couple trades a week, it's costing you like basically $20, $30 a month to do your trades. So enter these new companies that allow you to trade for free, and they're having big content creators like Graham Stephan, right? Other financial channels, Nate O'Brien. They're all financial. What is it? Whiteboard financial education, pushing these apps. And what that does is that these other channels, including me, which is extremely small on one side of the spectrum, the small side, but all together, we are actually reaching out to millions, potentially billions of people. And when you get all those people to download these different apps, you now have more fingers, more hands in the cookie jar, right? And the cookie jar is the market, not just the US market, the world market, but especially the US market, because a lot of these apps only work in the US. And what that does, though, is that no longer is the stock market just investing on fundamentals, which is usually what professional investors do, right? So the financial advisors, investment banks, hedge funds, these are brilliant investors who usually have degrees in economics. Sometimes they're brilliant physicists. They definitely, a lot of them have MBAs, or they have tons of business experience, or whatever. They have financial fundamental experience and education, right? And that's why when they buy and sell stocks, they buy and sell in the millions and billions of dollars, which influence stock prices. It also influences the price, because what they are buying into, if Warren Buffett goes out and buys, he did this back a couple years ago when he bought Southwest Airlines went up because everybody trusts Warren Buffett, right? Well, now, because of retail investors, you and me, we have this ability to influence the market without knowing it. And when you get a couple tens, hundreds of millions of people all investing in the market at one time, and they don't know what they're doing, you get the market to act the way that it's acting right now, being super overvalued, right? And a great example of this is that, there's 3 companies, I think, that just recently claimed bankruptcy. There's way more than that, but Neiman Marcus did it, J. Crew, JCPenney, Hertz, all claimed bankruptcy. Now there's 3 companies, but I'm going to focus on one that claimed bankruptcy and saw 100, 200, 300, 400% increases in stock prices very recently, like this past week. And you're like, why is that? If you guys don't know, bankruptcy, there's 2 forms of bankruptcy. One is, I always get this messed up. There's one form, I think it's chapter 13, where we're done, we're shutting everything down, we're selling everything, we're sorry to our creditors, we're sorry to all our lenders, we can't pay you, liquidate it, we're walking away from this dumpster fire, okay? That's chapter 13, I believe. And then there's chapter 11, which is restructuring. So you're basically saying, hey, we don't have the cash flow, we don't have the money to pay you back. Let's work together and let's figure out how we can get this going to basically pay you back. But we want to continue doing business, but we just can't keep doing business the way that we are set up right now. Okay? Those are two different forms. Either way, when you claim bankruptcy, your stock is shot. All right? Now, what ends up happening is that Hertz claimed bankruptcy. I'm not sure which one they claimed. I believe it's Chapter 11. Either way, not good. Their stock prices dropped down to basically like 70, 80 cents a share. Within 2 days, it popped up to over $5 a share. Right? Why would they see a nearly 500% increase in their stock price? More than that. That's like nearly 600% increase in stock price in a few days. The reason is that they're looking into it based on my source of the article that I was reading, and it was no smart or wise investor or investment fund would ever invest in it. They looked into it, and it wasn't investor or investment firms. It was retail investors buying into it, hoping to see a pop in price, and then they quickly sell. And so what ends up happening is people see it for 80 cents. They're like, well, man, if it goes up to like even $1, I make 25%. And so what you do is you see a bunch of people piling into the stock, hoping for a pop, not business fundamentals, not business news or changes in leadership or anything that are being purchased out by another company. Nothing like that at all. Is you get a couple million people investing into a bankrupt stock like Hertz. I believe it also happened with JCPenney and J. Crew. Could be wrong on that, but it happened to a couple others, where they go into it trying to pop up the price, and then they take their profits off the table, and then they walk away, and then the stock price goes back down, leaving a lot of other people. Remember, the stock market is basically just trading money back and forth. So some people who got in at 80 cents and they went up to like $5, they made like 5x their money. So they put in $10,000, they now walk away with $50,000. They took $40,000 from somebody or several people, from other people, right? That's basically all it is. The stock price then went back down to like $2 a share within the next day or two. So there's a lot of people who made money. There's a lot of people who lost money, not off of fundamentals, but just basically buying and selling shares on Robinhood from just basically betting on how other investors will bet. Does that make sense? It's a really weird way of doing it, but that's what we're seeing. That's how it's influencing our market these days. And that's something really important to keep in mind, is that a lot of times, even if there's a saying in business where you don't know the price, like you as an individual, whether it's your business or your investment, even if you do all the calculations, the market is always right. The market is always the reality. Okay? Because even if, like, say my house, I'm like, I firmly believe that my house is worth $800,000. But the market is like, it's only $400,000. Like, no, but I put this siding into it. I put this type of insulation. I did this type of piping. I did this type of drywall. I did this kind of flooring, tiles, da. And I list it all out. I'm like, look, that's $800,000. The market's like, nope, it's $400,000. The market is always right, even if it's unjust and unsound. It's a weird thing of business that you just learn. And that's the point now, is that we have to learn how to invest in a marketplace where it's not sound investors looking at sound business and business fundamentals. I know I'm saying that over and over again. Take a shot, take a drink each time I say fundamentals. Is that we have to start understanding how the market reacts based off Robinhood, Webull, SoFi, and you have this very large number of retail investors in the marketplace now that we've never seen before. We literally have not seen this before in the past, 5 years? There's iPhones, but there were no free trading apps that allows you to buy and sell stocks literally any second during the day, right? Let alone having it out to the masses. And so that's something that when we're looking and valuing companies, I may say like, yeah, this company is significantly undervalued or overvalued, and I don't think I should buy in right now. One thing you have to keep in mind, Tesla is a great example. I believe it's so ridiculously overvalued. We'll run the numbers on it here a little bit. But you have to think about, like, there's a lot of hype. Millennials, the younger generation, really loves it. The businesses love it. People in general love Elon Musk and they think he's a brilliant mind. And even though that doesn't directly translate to cash flows and selling more Tesla vehicles and boosting the business itself, the hype behind it and investors loving it will increase the price, right? And we saw this happen for a lot of companies. Facebook and Amazon are great examples too, right? They made no money. Actually, they were losing a ton of money. And then people kept buying into it because they believed in it. There's a lot of hype behind it. And it grew to a point where they actually are somewhat profitable now. Facebook's more profitable. Amazon's still kind of up and down, but profitable. And so, but remember, for every Amazon, every Facebook, potentially every Tesla, there are probably a dozen, 20, dozens of other companies that don't do anything. GoPro is a good example. Okay, back over to questions. Edgeware. I'll take a look at Edgeware. Let me see. I won't run full valuations on Edgeware, Ray, but I'll look at the financials and tell you what I think. What is Edgeware? Tell me what Edgeware is actually. What kind of company is it? Hey, Daisy. Can you explain a little more in detail the steps after buying an index, an ETF? How does buying a share grow? Yeah. So I talk a lot, and I don't know if you guys been getting horrible allergies. My allergies never been this bad. I have to keep the stinking inhaler next to me because I can't sleep or sometimes I can't breathe because the pollen is so crazy right now. And usually by now it's gone, but I guess maybe because I've been working outside and I'm just like in a field of grass. My allergies have been nuts. So I don't know why I said that. Why did I tell you guys that? But, my dry throat. Sorry. Daisy reached out to me on, I believe it was Instagram, asked a really great question about investing in index funds and ETFs. So basically how it works, for folks that don't know out there, I made a video several months back about basically getting a guaranteed 10% by investing in index funds. Remember, there's two things here, just to be clear. I didn't get into it because I was trying to simplify it. But index funds, you don't directly invest in index funds. You invest in ETFs, right? And what that does is the ETFs, they track the index fund, right? So like the S&P 500, right? The 500 biggest companies. There's a bunch of different ETFs. There's SPY, SPY, VOO, and those are the two that I usually invest in, but there's a couple others that trace the S&P 500. So whatever the S&P 500 does, these companies basically invest to try to copy or imitate it as best as possible. It's not going to be exact, but it's going to be pretty darn close. And each ETF, it has different expenses, right? Because it's managed by some sort of investment firm, some sort of funding, kind of like mutual funds. They have expenses. It's usually not that high. I think VOO is like 0.1% or something like that. It's very reasonable. Anyways, buying an ETF is the same as if you bought a share of Tesla. And so a lot of times there's a dividend yield, right? It's not very much. I think right now, correct me if I'm wrong out there, you guys, VOO is like a 1.3, 1.5% dividend yield, I believe. But so you'll get a small dividend. But what you're doing is when you buy into it, I think VOO is at like 280 right now, right, you guys? I'll double check for you right here, Daisy. Ooh, I was close. 279.57. So it's trading at 279.57. So let's say that you buy one share of the Vanguard S&P 500 ETF. You bought one share, which represents the S&P 500. Over time, you'll keep getting that 1.1, 1.3% dividend yield, and the price will increase. So, for example, I bought into the Vanguard VOO at the last dip at, what was it? I bought it at like 210, 220. So let's say I bought it at like 210. If I sold it right now at 280, that's basically, I made $70 off that one share, or roughly 30%. Okay. So that's how you make money off of this. It's just like trading on the stock market when you trade individual companies. Now you're trading shares that represent the index funds. Does that make sense? So there's two ways. You make money off of the dividend yield, and then you also make money off of the appreciation of the share price once you sell. But if you don't sell, you don't make any money. Does that make sense? I hope that clears it up. I know it can be kind of, especially when you're newer and you're getting into investing, it's really kind of, it can seem kind of crazy with the index funds and the ETFs and stuff, but it acts very much just like any type of stock that you buy. Good question. Okay. Logan, how do you start investing in the stock market? What would be your strategy? Hey, always learning. What's up? Logan, that's a great question. It's a really big question. How I would recommend is getting started is actually getting started by figuring out is budgeting for it first. Okay. So I was just talking at the beginning of this live stream. What is it? 47 minutes ago, is minimizing your expenses. So once you get your budget, I would never recommend investing for anybody that doesn't have a budget or don't understand the ins and outs. Literally every single dime that goes into your bank account, you don't understand what's going in and out, don't start to invest, okay? Because you're adding a whole nother complexity into your finances, and you don't even have your finances in order yet. So get your finances in order first. Doesn't mean you have to make a lot of money. It just means that you just have to understand what's going in and out. Are you cash flow positive? Are you cash flow negative? Okay. Let's assume that we have that taken care of, is you carve out money each month that you are willing to lose, okay? In the beginning, when you're learning, might not be much. And it's really helpful now these days that you can invest for literally $1, okay? So let's say that I start off and that I know that I save, I'm making numbers up here again. I save like $400 a month, okay? If I save $400 a month, I know that I want to go in a rainy day fund. I know I'm working on building up money to purchase a home and all this stuff. But I'm willing, out of that $400, I'm willing to lose $40 to learn and start investing, okay? So I take 10% of that $40 and I put it into a different account. It can be Robinhood, it can be SoFi, it can be Webull. If I were you and you're just starting off, I would recommend SoFi because you can buy fractions of a share, which means that you can buy Tesla for like $1. You can start buying Amazon for $1. And because otherwise you'd have to pay like $2,000 for Amazon and $1,000 for a share of Tesla. You take that $40 aside, and what you do is you start learning about the stock market. So just like everybody else in this channel who's reading articles, watching YouTube videos, and they're educating themselves, you do the same thing as you're playing with your money, understanding that you might lose all of it, okay? Now, as you learn, you focus in on a couple of key things. I say index funds, so like the S&P 500, the NASDAQ, the Dow Jones, okay, those ETFs. I talk about them a lot, the VOO, DIA, and QQQ, all right? Those are the three index funds, or the ETFs that track the index funds that I follow. And then you can play around and purchase. When you first start off, I never recommend holding more than three, okay? Only three companies. The reason is when you're first learning is I want you to dive into the companies and I want you to understand everything about that company, whether you like it or not, but obviously invest in companies or start to learn companies that you're really interested in, right? And even when you're first starting off, if you've not taken any business classes, you haven't started, I'd say one stock, okay? Invest in the index funds, understand the market, and then one stock. And what you do is you dive into that stock. Full heart. You read through the financials. You listen to, let's say Tesla, you listen to Elon Musk talk during his annual meetings, his earning reports. You read through the earnings reports and you understand what's going on. Like, why are they building in Shanghai, China? What are they doing over in Germany? How much are they investing? Where are they getting that money to invest in it? Are they selling shares? Are they pulling out loans? What's happening with the leadership team? Oh, Elon Musk just tweeted out a bunch of stuff. Oh, he shifted from chairman or CEO to chairman of the board or vice versa or something like that. What's going on? What's happening, right? Where are they getting their engineers? Are the people there happy? How has the COVID-19 affected their production facility? You dive deep and you understand it. And once you can do that for one company and you see how the market reacts to it and what its numbers mean, like the earnings per share, the cash flow, the income statement, balance sheet, debt, all that stuff, because you dove into one company, then you can start playing with more money in other companies. You can replicate that and go into over to Disney. You can replicate that and go into Qualcomm. You can replicate it and go into Amazon. Does that make sense? But I think the big mistake that a lot of people make when they first start investing is that they ride on the hype of the media. Okay, and so they hear a lot of stuff. It's like, oh, well, Boeing. I heard on CNBC that they said this. Oh, I heard over here from Jim Cramer that they said this. Oh, I heard from this article that they're doing this. And they put money into these places, not understanding. And don't get me wrong, we're all guilty of it, right? Is that you bounce around like a ping pong ball, or not pinball, that you just bounce around trying to invest in all these companies. And I think that's extremely dangerous, and I don't think it's sound practice, because you may make a lot of money now in the short term, or maybe even lucky in the long term. But fundamentally, in the long term, if you're investing hundreds, thousands, millions of dollars, you will lose. And you will lose a lot of your money playing that game, right? So I always say the way that I invest, the way I encourage other people to invest is you understand a company. You start off slow. Once you understand and you get into it and you feel more comfortable, then you replicate it and you do it again. Okay. But for now, invest in the index funds and invest in one company and dig deeper to really get what's going on. Okay. And only invest with money that you're willing to lose. All right. Okay, so Edgeware, they innovate and sell new streaming solutions for TV and video content from what I know. Okay, I'll take a look at it, Ray. Kramer thinks Wall Street pros may be playing a game with amateur Robinhood traders. No, I didn't. I totally would. I would believe that. Let me see. That totally would not surprise me at all. Oh, yeah, that's on CNBC, yeah. So Kramer thinks Wall Street pros may be playing a game with amateur Robinhood traders. It totally makes sense. CNBC Jim Cramer said professionals on Wall Street are taking advantage of amateur investors by bidding up downtrodden stocks and pre-market trading. It's a game. If it weren't securities, let's say it's Monopoly, let's say it's DraftKings, it would be so much fun. If people wanted these stocks, there would be plenty of supply if they would just wait until 9:30 a.m. That's super interesting. That's funny. Yeah, I don't. I get it. It's and that's exactly what I was just talking about. It's like you got to learn. It's playing the game. It's no longer like, hey, this is a good business. They got good financials. They have a ton of cash. They have no debt. Let's invest in it. It's like, well, okay, that's a good company. First off, what's everybody else? How is everybody else going to react to it? Let's play that game. Let's mess with the market a little bit and see if we can drive the prices down a little bit so we can get in cheaper, or let's drive the prices up and then sell out to get everybody buying it so we can take the cash. It's a weird game now. But yeah, interesting article. Thanks, Jen. Okay, let's see. Where are we at here? And then last thing before we get into Tesla, which I'm not even sure I'm going to be able to do very well, but we'll try it. We'll see what numbers they have. Again, I haven't looked at the numbers. I'm not personally an investor in Tesla, so I haven't looked at the numbers. But anyways, Airbnb bookings are up. So we talked a little bit about the second wave, and now Airbnb, they came out and said that the last 2 weeks of May, beginning of June, this year, there's like an increase in bookings from the previous year. Now, take that with a grain of salt because the company is growing. So overall, if the company keeps growing, even despite the coronavirus thing, there is going to be more bookings. But they're saying that it's in countries, some very countries like United States, South Korea, Germany, Ireland, and I think there's like one or two other ones that are coming, that they're big hitters. And the interesting thing is, and I didn't see it this way, but I've noticed that in my properties too. I've noticed that I still get the same number of bookings, give or take. It's just the prices are a little bit lower. I've told you guys before. I'm getting about maybe a 10 to maybe 25% decrease in price, which is not good, but I mean, it's totally fine. I'm still able to make money off of it. But it's interesting because it's people that are relatively local. People who are driving through, people visiting family, people trying to social distance responsibly because obviously a hotel, lobbies, bathrooms, and they have like hundreds of people going in and out. Obviously not right now because of what was happening, but it's just not as social distancing pure, I guess, as you could say, as an Airbnb. And so you have a lot of local vacations or staycations. And so instead of having people from, I used to have a lot of international travelers coming in. Instead of having international travelers, I now have people coming in that live a couple hours away, coming in, from 200, 300, 400 miles away doing a road trip. And you'll see this a lot, especially from folks who are working at home. They are now able to just like, hey, instead of flying across the country or into another country, let's drive to this area that we know it's really nice and spend time in the car, and let's stay at this really cool Airbnb. So not only is it less expensive, but they're able to work from anywhere, and they're still able to take their vacation, especially right now, it's summer vacation, right? So it makes sense. It's not that the entire industry is going to get wiped out, which the hospitality industry got hurt really hard, but that wasn't because of people not wanting or not having the money to travel. That was because literally nobody was allowed to travel, right? Like entire areas were like, no, you can't come here. And if you come here, you can come here. We're going to stick you in quarantine for a month, right? Nobody wanted to do that. I mean, there's all these horror stories about people being stuck in airports for like days. Like it was really, really crazy at the beginning of this. But with that said, more so than ever, people want to travel. People need to travel. We have this culture, especially here in America, I'm sure in other countries too, where people love to travel, right? Whether they go internationally or they go locally. We're no longer this culture where we just stay at home, even for us introverted people like me, where I'm totally fine being out in the woods by myself for like weeks or months at a time. I don't represent the vast majority of people. Maybe you're the same. I don't know. But a lot of people, they want to travel, and if they can do it on a tank of gas, they'll do it. And I think that's what, actually, I don't think that. Airbnb proved this. They said that but I think roughly half of their bookings are people within 200-mile radius. They live 200 miles away from their Airbnb booking, which is an increase over what they've seen in the past. And so what that tells me is that Airbnb or the short-term rental market is still going to do just fine. May not be as profitable, but the thing is that it's not the market that's going away. The market is shifting and adapting to it. Does that make sense? So I found that really interesting, and I was actually super surprised to see that that their bookings are actually higher than what they had last year. So, all right, let's dig into Tesla. Any more questions over here? Nope, we're good. All right, let's take a look at Tesla here. Let me share my screen first. Move this over. Move this over. Boom. 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 All right. Tesla. So as you guys know, I love using Morningstar. Morningstar is an outstanding, and I'm not sponsored, and I don't even have their premium. I'd like to get the premium. I forget, it's kind of expensive though. I already have so many subscriptions. I don't want to do it. But I use Morningstar to pull all my stuff. Numbers. All right. So let's go through the exercise again, folks. So we're going to go Tesla in here. And then if you have other questions after I do this, like what Ray asked me, I'll jump into any stocks that you're looking at. I won't do a full valuation because it does take some time, but I'll look at the financials and give you what my thoughts are on them. Let's get this going. Tesla. We'll just have these all pulled up for us. All right, so first things first, this is a spreadsheet that I created. It is not perfect by any means. It is my hack and slash way of basically getting to the numbers that I want. Something I learned and I use a lot of, but during my time when I was working professionally and even during graduate school, I was not the Excel guy. Okay, I was more of the questions. I could ask good questions and head up in the clouds, like thinking creatively guy. I have my friends who are really good at this stuff. I was super envious of. Okay, so first things first that we always look at, we go right away. We got to pull some quick numbers. So we're going to go over to financials real fast. Actually, my mistake. We look at current stock price, which is $9.35. I know they were trading over 1,000. Well, they took a huge dip. Let's go to the current PE ratio. This is me good. Nope. Whoops, sorry. Well, shoot. We might not be able to value this. I thought that they were positive. So right away, the reason why I know we won't be able to value it, and maybe I should start. I probably should start looking at numbers before I tell you guys what I'm going to do. Is the price to earnings. You see how there's nothing right here? That tells me I know that they were negative. Because if they were positive, if they had positive earnings, there'd be some sort of number here. But clearly they don't. So let's just jump in their financials super fast here, just so see if we can even do this. Yeah, we're not going to be able to do it. My mistake, you guys. So start throwing out ideas, or I'm gonna go randomly pick another company. But well, bad on you, Kai. So just for those folks that are still following who haven't done this with me before, basically the way that I value stocks, or this valuation method, which is it's called value investing, or discounted cash flows. There's a couple of different terms for it. The intrinsic value method is what you do is based on the cash flows or the profitability of a company, you can create pro formas, which basically project out however many years, and see what that value of the cash flows or that company is today. The problem with that is if the company makes no cash or they're losing money, you can't run the formula because it's negative, right? You can't multiply a negative with a positive and to get a positive. So right now we can see right here that they're negative. They're negative almost 2 billion, negative $1 billion, negative almost $1 billion again. So they've got debt. They've got some cash too, which is fine. So right now Tesla's insane value is all hype because they have no profitability. That means for every, let's see. Yeah, so diluted earnings per share. So each share that you own, so let's say $1,000 to keep it simple. From last year, for 2019, you paid $1,000. Let's do it right now. Trailing 12 months. You give them $1,000 for the share, or you trade $1,000 for a share, and they'll give you in return negative 74 cents. So you have to pay them 74 cents to own a share of Tesla. It's basically what that's saying. All right, Ray, that's a good point. Let's do another car manufacturer. Let's see. What are other car manufacturers? Should we try to do Ford? Is that a popular one? I can't believe Ford is still trading at $6.41. I wonder what they were at. Let's do Ford, you guys. Or you guys want to do or Toyota? Should we do Toyota? I'll wait for you guys. Toyota or Ford? Man, Ford got hit so hard. Whoop. I just missed my mouth. All right, let's do Toyota. Real quick, I just want to do a quick comparison. Ooh-wee. They're doing a lot better than Ford. At surface level. Do you guys eat popcorn like this too? Or is it just me? Oh my gosh. Okay. Let's do this. We'll do soda. Uh-oh. All right, Toyota. So let's change this here. Forgot to put the dates on here. I'm not sure it's up to date. Was it today's the 13th, right? Yep. 13.20. Okay, let's see. Toyota. Valuation. Beautiful. All right, so they got good price to earnings right here. All right, so price to earnings right now is 11.47. PE ratio. Current price, what was it? 127 something? 127.82. So we're going through and we're just plugging in some things that we know already. Cash, how much they're worth, how many shares they have outstanding. What is this? They have this in millions, not billions. That's a strange way of doing it. Oh, it's in Japanese yen. Okay, I guess we'll do it in yen and then we'll convert it in at the end. Right? This has to be yen. Yeah, it's in yen. Okay. So we'll do this in yen. So the number's going to be a little bit different. So it's in billions in yen. So I got to remember that. This is in billions. Okay. So, well, that kind of sucks because nothing can be easy, huh? That's going to suck because their stock price is in US dollars. I'm assuming their price to ratio. All right, I'm just going to have to highlight this and we'll come back to it. We'll see. We're doing this on the fly. Let's see if it works. All right, so let's see. Cash. They have 6 billion. Let's just do this. I want to do dollar to yen conversion real quick. Okay, so it's about 100. So it's about $6 billion. Toyota, Kinder Morgan, KMI, Mercedes. What do you guys think? Should we stick with Toyota? Let me just dive into, let's see their actual income statements. Let's see if it's in yen. Yeah, it's all in yen. You guys want to keep doing Toyota? You guys want to do something different? People do love the F-150. There was an article that just came out that talked about the F-150 versus the new Tesla pickup. I am definitely getting the Tesla pickup. I have my truck parked out right here. Right now that's in the mud. It's a Toyota Tacoma. Love it. Absolutely love it. It is dented and beaten up to hell because of, I can't eat and talk right now, but because of all the construction that I've done. And I want a truck. I've always said, why can't they make a truck that does not dent? I don't feel like it's that hard or scratch, especially construction trucks. Every construction truck that you see out there always has dents and scratches in it. And if they can make a car like the Tesla truck that can do that, oh, love it. Yeah. What's up, Mark? Welcome. No worries. How's Alibaba treating you? By the way, what do you guys want to do? Okay, I'm gonna jump back to Ford. I don't want to deal with the yen. Try and convert back and forth. All right, I'm sorry. We're bouncing all over the place. I now know that I need to do a little bit of research beforehand. Before doing this. All right. Hopefully this is the last one. Okay, going back. Looking at the PE ratio. Good, they have positive PE ratios. Uh-oh, I can tell right now they're in trouble. Because you can see right here, in 2019, you see how this pops up? They're trading at relatively consistent PE ratio of 11, 7, 11, 5, and it pops up to 23. The higher this number goes, it means that they are making less money for a higher share price. Okay? So I can tell that right off the bat. Let's look at see how much cash they have. I'm gonna move this over. If you guys can't see something because of my big face or whatever right here, just let me know if I'm blocking it. I don't think I'm blocking it. I am blocking it, huh? Yep, I totally am blocking it. I'll move this down here. Like that. There you go. All right, cash. Dang, they've got some good cash. They've got 46. So you see this right here, you guys? How they had consistently like around 35 billion in cash, and it jumps 13.5. I bet you they took out debt, and they absolutely did. Look at that, almost in the exact amount, just like I said. So 13 billion increase in cash, 13 billion increase in debt. Well, 12 billion, but you guys get what I'm saying. So they took out some cash to weather this storm, which is good. And we're going to take a look at what their burn rate is. Total debt, they have a ton of debt, 168.69 billion. Ford, how many shares do you have? I'm going to go back to quotes. Market cap, 25.69. 25.6917 billion. All right, tax rate, average interest. Ignore that. All right, discount rate. So remember, this is forward looking right now. The baseline for your discount rate is going to be your safe interest that you know you can get no matter what. Right now, we'll say it's 1% because that's what you can get in the banks. Everything over that 1% is going to be considered a risk premium. Remember, the higher the premium, or the more risky a company is, the higher the premium is. Ford is a fairly safe company. It's not like a growth company like DraftKings or something. DraftKings, I'd probably give them like a 20% discount rate. But let's say that, generally speaking, for a publicly traded company, between 8 to 10% is the general rule of thumb. But with interest rates so low at 1%, I think for Ford, a 6.5%. And this is the part of the art, right? There's not an exact science to everything on every detail. This is the art of investing right here. It's like being able to understand discount rates, the market, and putting a fair number right here. And even I'm wrong sometimes, but let's go with that. EBITDA multiple is the number of years out that you, again, remember talking about the future? It's how much further in the future you think that Ford can continue doing this. And in this case, the EBITDA multiple, again, fancy business jargon, is just this profitability right here, this line right here. And when you take out all expenses and you're multiplying this number by this number here, you guys can see this, right? Yes. I think Ford can do, a general rule of thumb is 8. Ford, 7's a fair deal. Now let's give them 8. Let's give them benefit of the doubt. Okay, let's dig. So financials. We're going to go into income statement. We're going to export to Excel. And I'm just going to bring this over here to this screen just so it's a little bit easier for me to see. And I'll bring it back over once I get everything uploaded. How's everybody doing though? Give me an update on what's going on in your guys' lives. Are you guys back to work? Is everything back to normal for you guys? Or I guess back to as normal as it can be, right? It's tough because I also take care of my my elderly grandmother, and she's in good health for her age. She's 87 years old. Awesome lady. But it makes me nervous, like, because when I go out, it's not just me. I'm not too concerned about me. I mean, even though I have like allergy-induced asthma, shoot, I just messed something up. It makes me nervous if I caught something and I passed it on to her. You guys know? I know you guys can't see my screen right here. I just want to use the big screen for pasting everything in here real quick. But I want you also to see how I'm doing this for those newbies to this. I get a lot of questions on how to look at stocks and value stocks. I'm like, come in to the live stream. I literally go through exactly what I'm doing. I do my best to try to explain everything. Okay. So what I just did here, for you who are not in the know, is I downloaded the income statement, balance sheet, and then statement of cash flows. This is just kind of like I call it the dead zone, where you just download information. And then over here, my formula should pull it, and immediately you can see all of these NAs where it's not pulling correctly, because all companies, they don't all report the same way. We try to, and we hope that they do, but they don't. And so what that means is that I have to go in here and find out where they hid certain numbers. Mark, Alibaba has been good. I did a correlation with Amazon when they were the same price. So it basically took 6 years from $200 per share to reach 1,700 across years. Hopefully they'll be alive. Okay. Yeah, I do the QQQ. Can you do the NASDAQ 100 tech? It's going to be difficult, Mark, to answer your question. It's, for one, you got to be very careful about valuing one company versus another. Now, when they're in the same industry or genre, you can definitely see like how they correlated. But remember, when Amazon, they were doing something very, very different, and they were basically a huge disruptor the past decade or so. They created this whole thing for themselves. And so Alibaba's coming in at a very different time period. So remember, you're not comparing apples to apples here. And so you can use it as kind of like a general gauge, but be careful of comparing two companies, because also we don't know what the R&D, what they're doing over at Alibaba. I mean, I really don't even know if they are. Are they creating like Kindles? Are they creating the Echo, right? That's the Amazon thing, the Amazon Echo. Are they creating Audible? Are they buying up planes to ship their stuff faster? Or do they have a huge amount of subscription, right? The $99 Prime membership, or maybe $109 Prime membership. Do they have all of those things? Those factors played into a lot of how Amazon went from $200 to $1,700, right? You got to check and see if is Alibaba, it might not be the exact thing, but are they doing something similar to disrupt the market to become more of a mainstream business for consumers? As far as the NASDAQ, you can't really maybe there is, I don't know of one, but to do an entire index fund, you would have to literally go and value each stock, and then you would divide, so the 100 tech, the biggest tech companies, and then you would then divide it by 100 to get the valuation of the NASDAQ. That would require me weeks and weeks of work. But we can do individual stocks. Well, I can tell you right now that it's definitely overvalued. Elderly have a high risk of falls at that age. Regarding grandmother, good lighting to the bathroom, flat shoes if possible, one-story house. Absolutely, yeah. She's in a ranch-style home right now, and Yeah, we try to get the lighting, and she's had a couple of spills. It's really sad. My grandfather, her husband, passed away not because of a fall, but he fell and he really hurt himself. And they gave him some sort of, I forget if it was a painkiller or something like that. And they said, hey, just to let you know, this could hurt your liver. And of course it did. And he died of liver failure. And I am so against painkillers now because of what I saw it did to my grandfather. Really sucks. Yeah, falls are horrible. I really didn't, before I had to take care of my grandparents, I really had no idea how bad it was. You know, it was just like that joke on the commercial, like, help, I've fallen, I can't get up. That's what I thought it was. But man. All right, focus. You guys are distracting me in a good way. I love you guys all, but I want to make sure I get this to you guys. All right, so AE to AK, AE, AK, AE, AK. AE, AK. And then this, you gotta drag it over here. And then we're gonna drag this over. This is 6. And all I'm doing right now is I'm just fixing my formulas so it pulls from the right spot. Because like I said earlier, is that companies, they don't, I shouldn't say hide, but they do put numbers or certain numbers in different places in the financial statements that causes my formulas not to pull up. So then you kind of have to hunt and peck and see where they put everything. So we just saw usually depreciation is inside the income statement. They didn't put it there, so I had to go over to the statement of cash flows. And right now what I'm looking for is CapEx, which is capital expenditures, which is big expenses on machinery, property, big assets, right? And so I see it right here. Nope, I did not see it right there. I lied. So I'm going to go over to the statement of cash flows and find their CapEx. I see, where is it? Right here. So they have a lot of capital expenditures, but why didn't my formula pull that? They clearly have it. VLOOKUP. Oh, that's why. So we're gonna go down here. By the way, if you guys ever have questions over what I'm doing, please ask me, because I remember how confusing this all looked when I was first learning it. Right here. So all it is, they label it differently too. So if they label it differently, my formulas can't pull it up correctly. So now I fixed the label and there it is, it pulls it. But this one's not being pulled. I don't know why that's at 0. So let's go over here, copy, paste. This is 7. All right, so here's Ford. So right off the bat, hang on, let me make sure these numbers are right. These are not right. So now we gotta look at the debt, because the debt is a big no-no. Or in this case, it's really big. So we've got a couple things. So current debt, so remember, whenever you guys read current, it means within 12 months. So if they own any type of short-term debt that is they have to pay back within 12 months, it's called current, okay? So in finances or business, whenever you hear the word current, it means 12 months or less. Now we're interested in current. We're also interested in long-term debt right here. Boom. Well, why do they have so much random stuff? Okay, let's see. So this is where we're digging in. We're trying to figure out a story here of what's going on. So they have financial liabilities right here. They've got long-term debt and capital lease obligations, right? That adds up to this. I usually don't want to put in capital lease obligations. That's usually, like it says, leases, right? If they're renting out plant, property, anything like that. So I usually don't want to group that into long-term debt because I treat it differently. But long-term debt right here, it includes other loans, non-current. Sorry, my phone's like blowing up. Notes payable. Oh, that's 2019, right? Or is that 2015? Sorry, that's 2015. So right here, they pulled out 1.5 billion. I'm assuming that is for them to float it because they just did that last year, unless they did something different. See, whenever you see something interesting like this, like you see how it's all blank right here, and then all of a sudden a bank loan for 1.5 billion, just a nice clean number like that, you want to dig into the numbers and see why they did that. My assumption is they wanted some extra cash available. Because usually if they purchase something or they do something differently, it's usually not just a clean number like that. So, okay, we'll just go with this. Long-term debt right here. So what I'm going to do is I'm going to go back over her, go here, and we'll go this. We're going to convert it into, that's in billions, so we do 1 divided by 1, 2, 3, 1, 2, 3, 1, 2, 3. Is that billions? 1, 2, 3. Yeah. So many zeros. Drag it over. Perfect. And then we're going to do the same thing for this guy. For their current debt, because that's important too. Current debt. Drag that over, and then boom. So we've got their debt all listed out. And now we need to see principal payments for long term. And then principal payments, we come over here to their statement of cash flows. Under their financials. And you'll find this stuff right here. All right, you'll see repayments for short-term debt, and then we'll see repayments for long-term debt right there. Boom. So what we're going to do is we're going to take this number right here, and we're going to plug it right into here. But it didn't do that. It should have pulled that. Why didn't it pull it? It's probably a labeling thing. Repayments for short-term debt. So nothing. Repayments for long-term debt. Oh, because there was 0. My bad. It already pulled the long term. So this is 0. I'm just going to null this out. Whoops. Boom, boom. Boom. Mess this up over here. Sorry, guys. I'm going to get to your questions here in a second. I'm kind of on a roll trying to piece together this story for you guys. And I already can tell I see something that I do not really like. I want you to focus on this number right here. Wait, is that proceeds from issuance of long-term? Sometimes they write things so it's so confusing. Proceeds from issuance of long-term debt. Okay, that's them taking money. All right, I want you to focus on this number right here, okay? This is why they're trading so low. So free cash flows to the firm, they're looking not bad, right? They're making about, 2019, they cash flowed roughly. Remember, this is just their core competency, their business, their main business is about $9 billion. It's been fairly consistent, nothing crazy the last couple of years. Look at the insane amount of debt that they have and look at their principal payments. This is all in billions, you guys. So 33 billion, 39 billion, 41 billion, 44 billion, 46.5 billion each year that they're paying. So therefore, their free cash flows to equity, which basically is just your cash flow into the bank, and then you have to take and pay your principal payments, so let's say your mortgage or something like that. After that, they are negative 30, mid 30s every single year. So they are cash flow negative when you factor in debt, okay? Which is why they are right here. They are pulling out additional debt every single year to pay off their previous year's debt. Does that make sense? So like this year here for 2000, this is 2015, this is 2019, and this is the trailing 12 months, this column right here. So they paid off 33 billion, they pulled out 49 billion in debt. They paid off 38 billion, they pulled out 46 billion in debt. They paid off 41 billion, pulled out 46, paid off 44, pulled out 50 billion, paid off 46.5 billion, pulled out another 47 billion. And then they paid off 46 billion and they pulled out another 58 billion. Do you notice the problem with that? The problem is that they're paying down their debt, but they're pulling out more debt than they're paying off. So their debt keeps increasing each year, which we can see very easily. Where is it? Right here. Where'd it go? Right here. Well, that's weird. Why did it dip right there? It goes 89, 93, 102, 107, 102. That's just their long-term debt. They got current debt too. That's insane. Wow, Ford is not doing too hot. That really messes everything up. But okay, let's just move forward. Let's see what we can do with all this. All right, let's look at growth rate. So again, so common sizing. So once you get all the numbers here, again, I haven't touched anything yet. I'm just trying to paint together a picture. So I've gotten the picture of what's happening from all this mess and jumble over here. I like to make it a little bit simpler. So however many lines is this? This is like probably, what is that? This is well over 300 lines of information, right? Of financial data. I bring it and I put it over here, and I like to create it in like, how many lines is this? 20. So I took 300 into 20 that I can look at really fast, and then I can dig in deeper just like what we just did. And now we common size it. So common sizing means basically you divide all these numbers down here with this line up here, the revenue. And what that allows you to do is you're able to see the percentage of revenues for everything. And so you can see, like, because the hypothesis behind it, or the theory, I guess, is that as revenues grow, everything else, especially if you're an established, valued company, everything should track it to a certain extent, right? So if your revenues grow by double, roughly speaking, your expenses should grow by double, right? Because you're expanding. So that's called common sizing. And then we're also looking at, the first thing we're looking at is growth, which is right here. And their growth sucks. Sorry, not to be mean. But 1.5, 3.28, 2.2, and then negative 2.77. So for the next foreseeable future, do you guys know what's coming out with them? I know they created like a new electric Mustang. They're getting in the electric vehicle business. But other than that, I think they got rid of, correct me if I'm wrong, you guys, they got rid of a lot of their SUVs and so a lot of their vehicles that they don't make money on. And they're focusing on trucks and the Mustang, if I know that correctly. So let's do this. We know that this year's going to suck for auto manufacturers. They're going to probably do a negative. Let's do negative 5%. Let's do negative 2% the year after. And then let's just be super nice to them. And let's say that they can grow at 5. Oh, that's too nice. We'll say that they'll grow we'll say 5, and then we'll say 3% year after year after that. Okay? We'll be nice. I think that might be a little bit too optimistic. And then we're just going to double check all these numbers here. These are all formulas that I created. It's just pulling the median of basically the last 5 years of what they've done. So you can see right here, their cost of goods sold. Remember, we're doing a common size to the revenue. And you can see that's very, very consistent, which is a good thing. Fairly consistent. So remember, each tenth of a decimal here can equate to tens, if not hundreds of millions of dollars. So tenths of a percentage point does count for a lot here. But they're right around the mid 80s for their cost of goods sold. So I think 84.58 is perfect. SG&A, it's been decreasing and it's down to hovers right around 7%. I think we'll be negative 7.35. I'm going to give them the benefit of doubt and I'm going to do negative 7.2 instead of just negative 7.35. Taxes. So taxes is one of those weird areas where it's really, really messy because obviously they pay tens of millions of dollars to make sure they don't pay a lot of taxes to accounting firms or their accounting department. And so you can see typically a company of this size, they roughly would pay roughly 30% taxes. You can clearly see that they don't pay 30% taxes. They actually got money back, or I'm sorry, not got money. They did get money back last year. But they are, I'll just say they'll average negative 3%. Those are fancy tax accountants. Depreciation is around 5%. That's fine. CapEx around 4.8. They are very consistent. That's a good thing. Working capital is kind of all over the board. That's fine. We'll just keep it there. And then interest payments. So this is the interesting part, which we won't get into. I'm going to, just for sake of time, I'm not going to dig into this because we know that they're already negative with their equity. I just want to see how much operationally they're worth. Let's see, outstanding shares, price per share. That's not good. Tax shield, none. Shoot, they do need a tax shield though. We're going to ignore that. No, you know what? We'll toss this in for good measure. Sorry guys, I'm trying to think on the fly how to do this without. We'll just do this real quick. All right, that's it. Oh, okay. How tax rate? What did I mess up? Why is it negative? Well, first off, this is like $6. I'll perfect that here in a second. Oh, okay. So here's the problem. All right. You guys ready for this? My calculations are right, but let me just check something real fast. 646. This is the first time that a stock actually came out to be negative when they have positive, what do you call it? Earnings. All right. The reason behind that, and this is the huge problem that I want to share with you guys, is that debt. So how this calculation works when it comes to intrinsic value is the intrinsic value of this company. You guys can see right here, it's $103 billion. Let's say $104 billion. Once you have that valuation as a firm, you're worth $104 billion for Ford. But you immediately have to subtract out the debt they have. Because if you go in and I give you, or you purchase Ford, what ends up happening is that you have to value it by taking out the debt and then adding back in the cash, right? Because imagine a business is like a big bubble that has everything's included. The employees, the plants, the equipment, the debt, and the cash. And you're basically saying, how much is that bubble worth? And so they have so much debt that even though that their core business is worth $104 billion, plus the $46 billion in cash, which gives them, $150 billion valuation, right? They're worth $150 billion, but they have $168 billion in debt. So you take out that debt, you're now worth negative $18 billion. You take that negative $18 billion and you divide it by your 26 billion shares, and you are worth negative 72 cents a share. And that means they are super overvalued right now because they have no money. I don't know how much longer they can do this. Just this right here, you guys, this story tells it all. Is how poorly managed this company is that They are literally, it's like you paying your mortgage and your credit card debt by pulling out more debt. So you pay it off and then you go to the bank and you don't get the same loan back. You pull out a larger loan and you keep doing this every single year. And so they're basically living off loans right here. And that's why they have a negative valuation. And that's why for the last 10 years, we've had the best bull market. It couldn't have been better. Look at this. Last 10 years, the entire market was basically just this line that went whoosh. They traded down. Ford somehow traded down during one of the best periods, financial periods of the U.S. economy. You got to wonder, is that a leadership thing? I'd say yes. I think that this is my gut reaction to it, is that Ford used to be the biggest. It was the focal point of American-made cars and trucks, right? And it got complacent. And it allowed other companies like Toyota, right? It allowed companies like Acura and Honda and Tesla to come in and take giant shares of the market away and improve upon the entire system that they created. The whole automation or automobile manufacturing started because of Ford and Henry Ford's automation line. And I would say that they got, fun fact, do you know Kingsford charcoal was from Ford Motors? Because they would create charcoal from heating the steel or something inside their plants, and they just decided to bag it up. And then the other partner's name was called King, so it was Kingsford charcoal. It's owned by Ford. Interesting, right? But yeah, they created an industry, and this is such a fine example of how complacency shows up in companies. Companies that were once huge leaders. It's the equivalent of, Ford was the equivalent of Amazon, right? Or Tesla or Apple, right? And now look at them now. They're worth negative 72 cents a share, and they're barely trading. I mean, gosh, just the fact that they were trading down during one of the best bull markets our economy has ever had is really telling of how well they're led. Interesting. Okay, let's take a look at some of the other things. Let's see how Morningstar is valuing them. They're valuing them at $8. That's not even, I wouldn't even say they're worth $8. They have no economic moat. Uncertainty is super high. I would say just based on their numbers, I'd say their stewardship is not good. Interesting. Well, I'm glad I did that. I didn't know that. I didn't know Ford was hurting that bad. That's super, super interesting. Any questions about that, folks? Okay, some of you wanted to do a couple other ones. Let's see. Let's answer some questions. Alibaba spent $28 billion on cloud infrastructure. Also just bought a huge building in Singapore and hired 5,000 more employees. Interesting. Fernando, below what PE ratio should you invest? Fernando, it really depends on the stock and the industry. It's a hard thing to say, a blanket statement like that. It's like saying, it's very much the same as like, how much should a house be worth before I buy it? And it's like, well, it depends. Like, how big is the house? And more importantly, what city and state are you in? You know, it's like, what's the market doing? What's the neighborhood that you're in? What color is the house? What's the style of the house? So there's a lot of things that goes into it. But the one thing to know is that the higher the PE ratio, just remember, the average PE ratio for the market floats around 15 to 20x, okay? And so anything below that means that it potentially could be undervalued, right? So if it's trading at 7x, and we know that the market typically trades at 15 to 20x, you can say it's undervalued. Company like Chipotle, I pick on Chipotle a lot, but like Chipotle is that they're like at 90x or something right now. So usually like market usually trades at 20. Restaurants and fast food industry usually trades around 25, 30, I think. And then why is Chipotle trading at 90? So good question. Sorry. Thanks, Mark. Yeah, it's just a simple fall really can lead to bad issues. Yeah, I got a couple of ticker symbols here I got to do real fast. I'll add that in. So the first one was Edge. What was it? Edgewater? No. So you want to do crowd. Hey, what's up, Alato-kun? Got you. Hey, you got to give me the pronunciation of how to say your name, okay? Because I feel horrible for butchering it each time. Logan, I'm gonna get to these companies in a little bit. I just want to answer these questions. Logan, Tesla Model 3 first car. If you can afford it and you can get the tax write-offs or the rebates, both federal and state, but more importantly that you can afford it. Remember, it's about what is it? Insurance for me is about $60 a month. And then if you get a loan, it's going to be about $550 a month. Charging is almost null. It's going to be way cheaper. I think charging is like $20 a month, if that. But if you can afford that, then absolutely. I mean, it's an awesome vehicle. But if you don't have that finances or you don't have that money, I wouldn't do it. I'd find, like, honestly, if you're starting off, there's nothing wrong with the beater car. I still have my beater car downstairs, right? My little $4,000 Toyota Tacoma. I love that thing. And I've driven it. I've had no cars, and the cars that I did have, they were always beater cars. There's nothing wrong with good beater cars. But yes, I love my Tesla. How in the world did Ford get that bailout the last downturn and just give it back? I know, right, Steve? They definitely need it. Clearly they need it because they're pulling out loans every single month. Or, every single year. And it's a higher amount every single year. It's so nuts. Okay, somebody had asked me, I think whoever said it earlier, I think Ray said it, that, once Tesla starts coming out with the truck, and if the truck is anywhere nearly as successful as the Model 3, and if it truly can compete with F-150, and that's so scary now that we're looking at their finances, it's so scary that Ford was in the crosshairs of Tesla. Like, remember when they did that demonstration and everything? They didn't pick GM, they didn't pick Toyota, they picked Ford because they know that the Ford F-150 and the F-350 are the most popular trucks in the United States. I live out in the country, all working class, blue collar type of folks out here. Actually, not really. My area is actually all retired firefighters and business owners and like excavators and stuff. But they all have Fords. All Fords. When I say all Fords, I literally mean all Fords. Literally one house has all 5 brand new Ford trucks. It's insane. And the Ford has done something really well where they have done a very good job of keeping their customer. However, with that said, their customer base is a lot older. And they're getting to a point where the millennials, most of us here in this room right now, are not big Ford folks, right? We're the Tesla folks. And so I think Tesla really could put the nail in the coffin for them if they take away that market. All right, somebody who said, Ray said Edgeware. All right, let's take a look at Edgeware, and then we're going to look at Crowd. Edgeware. AB. Is this, Ray, are you still here with us? Is Edgeware, is it international stock or something? Oh, is this it right here? Edgeware AB? Yeah, it looks like it's traded over in Europe. Is that right? Hey, Curtis, what's going on, man? That's great. That's awesome. I got my first car payment I ever had in my life was at 34. Hey, Ray, I'm sorry if you're watching this later. And hello to all the folks who watch this later while you guys are listening to me ramble at work. Thank you. I love you guys. You guys are freaking awesome. But Ray, if you're listening to this later, I can't find Edgeware, and the one that I did find is trading at 48 euro cents. I'm not sure if this is the same one. You said it's a TV or something. Oh, it is the TV thing. Okay, let's do quick finance. I'm gonna do quick financials for you, Ray. Okay, I'm looking at it. I'm not huge into penny stocks, but right off the bat, they have, what is this? What country? The KR? What's KR, guys? Is that Denmark? All right, whatever this is, it's 151 billion to debt. They're very little debt to how much cash they have. That's very good. However, their net income is very low. It's actually not low, it's actually negative. And it got super negative in 2019. Let's just dig into here real fast. So right off the bat, without knowing what they do, their revenues have dipped pre-COVID a lot. So they went from in 2015, they went to 204 billion, jumped up to 252, very respectable, very good. Dropped down to 237, not good. Dropped down again in 2018, and then a huge crash in 2019. And then the trailing 12 months, we're seeing a lot of downward trend, which probably represents their stock price right now. And then at the end of the day, they have negative net income. And then if we look over at the statement of cash flows, I'm going to look at their operational. Whoops. Let's dig into their operating cash flows real quick. And their operating cash flows have just taken a huge dive, Ray. Yeah. Balance sheet. Oh, I forgot to look that up for Ford. Hey, I'm going to look up Ford shares. I'll look that up here in a little bit. All right, they're not buying back shares. That's good. Financially, I think this would be a purely speculative gambling type of bet. If you think it's going to go up, it could go up and down. And being a penny stock, you could make good money because if you think about it, it goes from 48 cents a share and it goes up to $1. You basically doubled your money. But fundamentally, I would never invest in this company. It's small core. Just because of the last several years, I don't know anything about the leadership. I'd read into it. If they have some new technology or some new IP, intellectual property, that's very different than everybody else, or they're partnering up with somebody, then I would consider looking into them deeper. But as they are fundamentally, take a drink, running right now, they are not doing a good job. Revenues are going down, which is a horrible sign. Cash flows are going down, that are actually negative, and they haven't produced positive net income, which is what stock prices is based off of, for the last 3 years. Not a good sign. So, sorry, Ray. But if you want to gamble away. But that is like a pure gamble. And then what was the other one? Somebody asked for something else. Crowd, right? Krona, Swedish. Thanks, MA. Not working this weekend. Nice, Curtis. Welcome. Crowd. All right, so what's this? CRWD. It's cloud computing. CrowdStrike Holdings, US. All right, let's just see what's happening with the stock here. So this company is a cloud computing stock. They went public in just last year, almost exactly a year ago. Okay. And they haven't been trading too great, but wow, post-COVID, they skyrocketed. Okay, which makes sense. A lot of cloud computing. Let's go over the financials. Oh, I keep looking. I need to look up Ford and see if they're selling more shares. Actually, I'll do that super fast. I don't want to forget this. My memory has gone. Look at that, you guys. Right? What is that? 2019? Look at this. So they've been needing more money. So they've been slowly releasing more and more shares, selling more shares. Sorry, I'm jumping all over the place. 2015, 2016, they sold, 16 million shares. And then they sold another 11 million shares. And then they sold another How come, what's wrong with my math? 13 million shares. They needed money. So not only were they taking tax, they were taking loans out. They were selling shares at, let's say that they were trading at around $10 a pop. They're selling shares to create, what is that? Between 100 to $200 million ish each year by selling shares. Okay. And then just last year, they bought back, how much is that? They bought back nearly $100 million in shares, which is, that's why they took out that loan. $100 million in shares at let's just say $10. That's $1 billion. That's $1 billion. And they pulled out these loans right here. That's probably what that is right there. See? Whoa. Figure it out. They took out this loan right here to buy back their shares. Bad. You see how we put together that story right there? You look at the story, you see how they have this huge dip in shares outstanding. You know that they did a buyback of roughly 100 million shares. You do a rough estimate that was $10 a share for $1 billion, and you see that they just pulled out a loan for $1.5 billion that same year. Now, why would they do that? Because it makes their price it makes their stock price go up. It's a very sleazy way of doing it. Okay, go back to CrowdStrike. Financials. Let's look at financials here. First thing, cash. They have $1 billion in cash. Debt is, okay, not bad. They pulled out a little bit of debt, but they had no debt before. I like that. They have a lot of cash to debt ratio, or they have a high cash to debt ratio. They only have about $40 million in debt. All right, is that 40? 40 million to $1 billion. Yep. Let's see. Operating cash flow just became positive. That's good. Free cash flow became positive. Net income is still negative. Revenues are growing though. They're growing pretty quickly. Is this a growth company? Yeah, I did. Yeah, they just came out last month or last year. I'm sorry. Crowd. Is a Class A, also called Class A. It's a holding company which engages in provisions of cloud-delivered solutions for next-generation endpoint protection that offers cloud modules on its Falcon. I have no idea what I just read there. If you know more about cloud computing, I'd look into it. Morningstar has them valued at $82 a share. They're currently trading at $93. I don't know enough about this company, but I would say as a growth company that's only been a year around, their numbers are actually not horrible. And remember about growth, right? So the reason why someone's paying $90 a share is because they're paying for growth today, which they're doing pretty well, 100%. I'd like to see it a little bit higher for a fast growth company. You typically want to see them doubling over and over, if not tripling or quadrupling year to year as a growth company to pay that number, because they're not making any cash. They're not making any income. You can see here they're losing about $140 million a year. Actually, very consistently losing $140 million a year. So if you want to play the speculative game and you think that there's some growth there and you know a lot more about cloud computing than I do, I'd say, yeah, the fundamentals of this business, it looks pretty sound. Not a lot of debt. They have a lot of cash in the bank, which is probably all from investors. And the growth is growing. They're doubling each year. So this next year, 2020, you should expect them to bring in $1 billion in revenue. And then hopefully they'll get cash, or they'll get positive here shortly. Cool? Cool. All right. Let's see. Mo. What's up, Hung? Did I pronounce it right? Hung? All right, now it's raining hard. Well, you guys, it's the 2 hour Mark, this has been awesome. I didn't even get to finish my smoothie or eat my bowl of popcorn. But you guys are all fantastic. I really appreciate it. Are there any last questions before I jump off for the weekend? But you guys, if you guys want to hit me up during the week, message me on Instagram, Kai J Andrew, and let me see, it's up here. And if you guys have, I'm not putting out videos right now, so you guys can't really comment on newer videos. But if you guys have any other questions that pop up because of this video, go to the comment section of this once I make it live, or I guess I publish it, and ask me questions. But other than that, you guys are awesome. This is one of the most fun things that I do all week, and I really appreciate each and every one of you that comes on, listens to me, interacts with this inside the chat room. You guys are all phenomenal, and you guys make this YouTube experience so much more fun. And I hope that I'm able to share a lot more of these lessons with you. In terms of my Tony Robbins moment, let's see, what should we do for Tony Robbins today? We did talk a little bit about fixing expenses, getting ahead financially. We talked about being objective, thinking critically. Let's go to getting negative thoughts out of your mind. Okay. Now, this is one thing that happens a lot, especially we're seeing a lot of mental health cases go up because of this quarantine lockdown thing. And I think it's so important. I know it's super important that the most important voice that you hear is the voice that you have inside your own head. And a lot of times, and this happens a lot too, and I call my friends out on it, is being able to call yourself and others out on when they're being negative. And a lot of times it's just a natural reaction to things, especially with the media consumption that we see of a lot of the negative stuff. And when you say to yourself that, you know what, that won't work out because of X, Y, Z, this is going to happen because of A, B, C, or like, you know what, they won't go for it because of 1, 2, 3, whatever it is. And a lot of times it may not sound negative, and you might consider yourself a realist, or you're trying to look out for your risk, is that you are focusing on the problem and what if a bad thing happens, instead of potentially what could be a solution to those negative effects. And what could you do to make it work, or to make something work out for you? And so I'm not just here trying to blow, hey, positivity, positive ideas, positive thoughts. I don't believe in that. Well, I do believe in that. But it's more about what I'm trying to push is solution-focused thought process. And a lot of times the number one thing is to call yourself out when you start thinking negatively, or you cut something off because of negative thoughts, or the what if this bad thing happens mindset comes in. Does that make sense? Instead, ask yourself, what can I do to not allow that to happen, right? Instead of like, what if this happens? Other than that, I think that's a huge step in the mindset that I was taught to me and that I learned in order to really achieve and move towards a life that I wanted. And that's really what this channel is all about, is I want to help you. I generally want to help you move towards the life that you want. It's not what I want for you. It's not what I want for myself. And if you want to make a ton more money than me and be way more successful, I want you to do that. If you want to be happier and better off by making even less money than me, I want to help you do that. It's whatever you want to do, okay? But the important thing is finding this level of fulfillment and happiness through your own means, okay? Because I find happiness through surfing and jiu-jitsu, I do not expect that from you. Because I love real estate and I love investing and making money, it doesn't mean I want you to do that same thing. Does that make sense? If you love being a graphic designer, photographer, or nurse, or owning a car wash company, and you absolutely love it, and you're okay making $500,000 a year or making $50,000 a year, I think that's beautiful, and I think you should do it. What I do believe in is, are you being a good human being? Are you a good citizen? And are you living optimally to improve the lives of the people around you, your parents, your kids, your friends, your coworkers, that type of thing. And I think right now, especially in times like this right now, we don't have enough people like that. And I'm hoping that this channel moves people towards that direction and they can achieve whatever they want to do, regardless of their background, their education, their skin color, or, the area they live in. And right now it's really tough looking at the news articles and these videos of where people live and what's going on, especially with these protests and, this whole, there's some states that ignore the whole COVID-19 thing more than others. So it's disappointing. All right, off my Tony Robbins soapbox. I love you guys all. Hey, what's up, Irma and Gonzo? Mark, I don't like Facebook. It makes me feel jealous. All my cousins brag about trips in Europe, so my entire Facebook feed is financials. I agree, Mark. I don't really post anything on Facebook either. I really don't even have a Facebook. But yeah, it's you'll notice it on Instagram as well. I try not to do it. I try to post things that are things that I really do. But I mean, I know this. I've been a traveler. You guys know this. I was gone for like a month and a half traveling Southeast Asia. The photos never really truly show the experience that you're in. And I've learned this traveling for 20 years. Costa Rica, Guatemala, Mexico, Vietnam, Thailand, Canada, Mexico, wherever I've been, is that the photos and the images that you see are never, the experience that you have, and I'm not trying to be negative here, I swear, is that it's never as good, or very rarely is it as good as the Instagram photos or Facebook photos show, right? It's a quick like, hey, everybody smile, and then filter, caption, hearts and all this stuff. But then you're just kind of like whatever. And I think that the folks that live that way, trying to put on this air or this shell of what life really is, I think that's tough. I think it makes it really, really difficult, because then you end up thinking that you live this life that's not as good as it really is. Does that make sense? So I'm with you, Mark. Yeah, I'm 100% with you, Mark. What is BitConnect? Are you talking about Bitcoin? No, you're talking about BitConnect. I think you said that last time, Irma and Gonzo. Brooks Johnson, well said, Kai. You seem like a generally cool dude. Okay, good dude. Thanks, Brooks. I haven't seen you in here before. Welcome. Irma, Gonzo, I do not have my real estate license. My business partner is in the process of getting the property manager certification. The way that we got away, or that I got away with it with short-term rentals, is the co-hosting. And so as a co-host, you don't need a property manager sign off. Some states do require it. We kind of skirted that, but now that we're moving into more long-term, we need one of us to have property management actual license. But other than that, we do have our insurance and all that stuff. Everything's legal. But because we were doing short term, we were able to kind of skirt along with the co-host and not actually be considered property managers. But yes, to answer your question, I'm not going to do it, but my business partner is. Oh, BitConnect is a scam. Don't bother with it. What is BitConnect? Now you got me curious. I feel like, was that all the notes? Did I answer everybody's questions? Excuse me. Looking, banking collapse, Edgeware. Yep. I'm going to look this up real quick because I like to be in the know. BitConnect. Oh, that's right. It says it was disconnected. It's like Bitcoin. Okay. Gotcha. Thanks for that. Thanks, Jen, for looking out for us. And then Irma and Gonzo, thanks for the joke. Hey, Brooks. I think a lot of people have been finding that index fund video more and more. Thanks for watching my videos. I've got a lot of other videos coming out. If you guys ever have like ideas on videos, I've realized on YouTube to be successful, it's kind of a bummer. I'm not trying to point fingers or anything like this. I'll give you guys some insider baseball here. Is that I am so incredibly humbled by how folks just like you respond to my videos, and how other YouTubers are able to do so well and get so many views off of by creating good content. What I am completely surprised by is how many YouTubers that I know that talk about finances, but they haven't done what they talked about. So for example, whether they're giving advice on IRAs, 401ks, they're giving advice on the stock market or real estate, yet they don't invest or they haven't done what they're trying to teach or what they're trying to share. Now, there's something to be said about people who want to do research, and I do this too. You research it and then you present the information to others. It's interesting to me when you have somebody who has not even gone through the experience of something, and then they try to share that experience with others. But I really generally, I don't know where I was going with that. Oh, I generally want to create more videos that can reach more folks. So if you guys have good ideas, it's let me know. I can't do these other videos that maybe I should start doing it because the other YouTubers are getting they're getting a larger outreach when they create videos like, hey, I paid like $1,000 on Fiverr for somebody to day trade for me and made me $10,000 or something like that. You know, those little catchy clickbaity titles. But I don't want to do that stuff. And then I think it's kind of boring. It's like, hey, how do invest in index funds, which is actually, you know, one of the videos that brought Brooks to us. So if you guys have ideas or thought processes of what to do, let me know. All right, so where's your next trip, Kai? Try the Philippines. I was just talking about the Philippines. I was watching, you know, Joe Coy? I was watching the Joe Coy. He's got a new Netflix thing out. And I was watching him yesterday. And I was like, dude, the Philippines looks really cool. I've got a couple of friends that are Filipino, so I know that they would hook me up. What's the main language of the Philippines? I know there's like 187 different languages, but there's one main one. There's a couple things that trips me out about the Philippines is that one, that I believe that they were colonized by the Spanish for a while. So there's some Spanish names and Spanish words. And then some of the last names are it looks like it's like Thai almost, which is like a bunch of words or letters just crammed together that shouldn't be next to each other. But yeah, I would love to go to the Philippines. Armand Gonzo, how was it for you starting the YouTube channel and getting traffic? I was wanting to start one from a military perspective on credit card hacking, VA loans, GI bills, etc. That's a great question. The YouTube channel was actually, you guys, it is not easy. I mean, like, just look at the channel right now. I only have 11,000 subscribers, and this is my second year. Now, granted, a bunch of those months I wasn't super active. Like right now, I'm not super active just because I'm spending 12, 14 hours a day on the construction project. But and I did that same thing when I was actually first building this house. I took like, gosh, what was it, you guys? 9 months off. I took 10 months off of finishing the build project. And it was really tough. But even now, when I've been active on it, you guys, it's so much work to come up with title or to come up with a topic. Make sure that you research and that you get the information as accurate or as possible. And then you create a thumbnail, you film it, you edit it, and then you publish it, and then you got to do that 2-3 times a week. It's like almost a full-time job. And so in the beginning, it was kind of challenging. I'm not saying to discourage you. I just think a lot of folks, they have this idea where it's just a simple way of creating content, and then people will come. And like some people, they did really well. Like Nate O'Brien and Graham Stephan, I think they shot up to like 100,000 subscribers within a year or two. And then, you have folks like me who are at like, in 2 years, 11,000. And you have folks who've been at like 3, 4, 5 years that are still at 2,000. So I would definitely say before coming into it, I didn't realize it was this challenging in terms of the amount of hours it takes. And it takes a lot of time. And so now I'm looking at it as more of a way of spreading a message. It's actually really fun. Like I said, doing what we're doing right now is a ton of fun for me. I find it super cool to be able to interact with everybody from around the world from different backgrounds. And I'm able to share a little bit of my knowledge or my experience. And then, a lot of times you guys bring up stuff that I have to look up and I get to read up on. And I don't know, it's fun. I like it. But I think that's a great idea. If you come at it from a military, I've learned that the more niche you get, and it sounds so dumb and stupid because I watched all these videos that was always saying this niche down, niche down, niche down. And I'm still trying to process it and seeing like what my niche is. But like really, if you can get a certain niche, and if you do like a military-based background, or you do something that's geared more towards that side of things, that is way better than being too broad. In the sense of, what's that Casey Neistat? He'd say, it's better to be different than to be better. Does that make sense? So instead of filming better or doing something better than somebody else, you want to be different. And that's a hard thing for me to figure out, like, how do I do that? And my angle is that I believe that I reached financial freedom, or I reached my financial goals very, very differently than most, if not all, YouTubers. I haven't met another YouTuber out there who we might share like similar threads, but nothing that took the pathway or the journey that I took. And so I wanted to share that. But I'm still learning to learn. I'm still in the process of learning that. But I'd say go out there and give it a shot. Definitely. But you have to commit to a certain amount of videos. Okay? You can't just do like one or two. Like I'd say commit to at least 20 videos, and you do at least one video a week. And then see if you really like it. But you got to commit to that number. So I got my chalkboard over here with like my next 10 videos and different ideas. All right. Man, you guys are popping off now. Okay. Wait. Tag along. Tag along. Okay, tag along. Running a sustainable home. Curtis, what do you mean running a sustainable home? You mean like, are you talking about like a passive house? By the way, are you guys interested at all in the construction of the house? Because I am redoing the outside. I'm siding it, and I put this. It's called rock wool. It's like this. I don't have anything in here. It's this insulation that's about 2 inches thick, and it's made from actual like slag of rock and stuff. And it's like, it's a sound barrier, and it's an insulator. Okay, I put it all on the outside. And dude, it's made a huge difference in heating and cooling the house. And I've only done half the house. So are you talking about passive, or are you talking about financial sustainability of a household? Good question, though. Gen A, have you been here this whole time? Dude, I love the gens, man. Gen A, Gen F, they're here in the beginning. And then whether I do this on a Saturday or Sunday, they're here at the end. Have you been to the Philippines, Jen? Oh, Jen. She's a stereotypical Filipino. My dad was in the Navy. Oh, that's so funny. Jen, do you live in the States, or are you living in the Philippines? Mark, I have not looked at investing in the Bay Area just because of what you said. I would have to take all of my money, like everything, to buy a property there, and then I wouldn't be as diversified. It's so ridiculously over. I think, what was it? My friend just sent me like this rundown, like old meth shelter, like a shed. It was like a little tiny 700 square foot rundown home, like completely rundown, and it was asking for $864,000. In Oakland, not even like San Francisco, but like in Oakland, in like this really seedy looking kind of neighborhood based on the houses around it. So yeah, to get like any type of place, like a reasonable place, you're looking at well over $1 million, and then to fix it up, oh gosh. But I'd love to go down there. I used to work out of San Francisco. Used to live and then moved to Portland. How about you? Oh, Jen, nice. You're in the Portland area? What city around Portland, Jen? My mom is retired RN. I think that's a stereotype, right? Joe Coy always talks about all the Filipinos being nurses. I don't know if it's true or not, but that's what he says. Oh, interesting. Brooks, what's your business? You received an SBA loan, so now I'm trying to figure out how to invest the generated revenue as the SBA loan handles operation expenses at 3.75. They gave you an SBA loan at 3.75% for 30 years. Brooks, that's insane. Tell me your business. I want to know about your business. Because you could probably grow. You should be able to grow in the long run, in 30 years for sure, at a faster rate than 3.75. For sure, Irma and Gonzo, you're welcome. Lived in Cali for 35 years and moved to Vegas 5 years ago, but I miss the Bay Area. I love San Jose. Yeah. What's up, Sergio? No worries. Ask me anything. Hi, Kai. I'm sorry if the question is out of context. I have some US dollars. You recommend me to exchange them right now before the second wave. Will that get heavy impacted? What do you mean, Sergio? Exchange it to what? I am not a Forex trader. My scale of 1 to 10, my knowledge about currencies and everything, I'd give myself like maybe a 2 or 3 out of 10, maybe a 4, but not much higher than that. But one thing that I know is that the US dollar is going to be, I don't know this obviously, but one thing I do believe is the US dollar is going to continue to increase in value over the next couple years. It's just in large demand. And in the long run, though, or in the short term, I don't know what's going to happen to it. But I do believe that, we're seeing it all across the world now, where the U.S. dollar is getting devalued. But in the long run, I think it's going to bounce back just fine. And the reason why it's being devalued right now in the immediate term is because they're just printing out so much money. So you can get into it a lot. In the long run, though, I think that the U.S. dollar is going to do just fine. I think that if you hold on to it for 5-10 years, I think it's going to continue to surpass, just like in 2008, 2009, when the value of the dollar dropped a lot because we were printing money again in the recession, but then it went back up. So Sergio, I think that you'll be fine if you kept some US dollars. What's your normal currency that you use? Wow, you live in Berkeley, Curtis? I heard that rental prices down the Bay Area, drop by 10 to 15%. I'm hoping that your Alibaba stock takes off, man. I'd love to hear that. Plus the rent. Ooh, I just lost. Okay. The only affordable area in the Bay is the Contra Costa County or Solano County. I don't know that area. Thanks, Irma. I always like being compared to Graham. I know you shouldn't compare yourself to other people, but Graham's a really cool guy. He's actually the reason why I bought my Tesla Model 3. He convinced me. But, dude, his channel has blown up, right? I remember watching him before he had 100,000 subscribers. Dude, Jen, I know Beaverton. I know Beaverton really well. Did you grow up in Beaverton? Yeah, I was just in Vietnam. It's insane how inexpensive Vietnam can be. But again, like I was talking to Mark, the government is everything. Context is everything. So even if you can buy a piece of property for really cheap, it makes me nervous that in in a communist country that they can and will exercise those powers without you knowing. But yes. Curtis, what I mean is building techniques for HVAC, water, electricity, low footprint business. Oh yeah. I think that'd be a little bit outside the niche of that'd be a little bit outside of my niche of the channel, but I mean I'd love to talk about it in these videos. But you know, for like you guys can't see it, but right above the camera I have my ductless heating. I got like a really nice I got like top of the line Mitsubishi ductless system, which is still way cheaper, and then I installed it myself, which saved me about $10,000. And so that's way more efficient. I'm going to install, during this remodeling project, I'm installing a pellet fireplace or pellet stove, which will heat up the whole house for literally, half the cost of electricity of running the heat pump for the ductless during the winter months, because it gets pretty cold. It gets, below freezing here. Especially I'm up a little bit higher than everywhere, the surrounding area. So it can be kind of chilly. And then the insulation is the big thing. Insulation and windows are the huge things. But yeah, water-wise, I'm on a pump, electricity. I got a heat pump water heater that works really, really well. All in all, it's that's a real art and science of how to design and build a house to be efficient and sustainable. That's a whole nother channel. That'd be a good channel though. That's a good idea. I think there's a couple channels out there that do that. Vegas is cheap, I've heard. It's going to be interesting to see what happens to Vegas. It's so funny. You guys are talking amongst yourself, and I'm just like, I feel like the guy that's just like jumping in and out, listening to your conversation. I wonder what's going to happen in Vegas. Yeah. Well, they're open, I guess, casinos, but if they see another huge wave, what's going to happen? I used to do rock climbing over at Red Rocks. Over by Vegas. All right, so here's Brooks. Brooks, he's a cell phone repair shop, and we are all self-certified. Ah, gotcha. That's awesome, Brooks. How long have you been doing that for? Here, I'm going to swap this out, so... Kai, in the new HEROES Act, if passed next month, you can defer 1 year mortgage and it's added another year to your entire loan amount. You can use the entire year of mortgage to invest in stocks. Yeah, that's one way of doing it. That's super risky, but it's definitely a potential. I'm going to be interested to see what they do. The stimulus package kind of went on the back burner as economies are opening, or states are opening, because obviously if everybody's getting jobs back and state governments are getting tax revenue again, they're going to hold off. They don't want to create that stimulus package if they don't have to. So we'll see, though, if they pass anything. But I haven't heard, or I haven't read much more on another stimulus yet. That's awesome that you got $50K for such a low amount for 30 years. That's so insane that you got for 30 years. I don't think I've ever seen a small business loan for 30 years before. You've been trying to good for you, Curtis. That you've been trying to rent it out long term, I'm assuming. Brooks, I'm totally getting the Cybertruck. I can't wait for it. I'll probably wait, not 2022 is when this gets on release, but I'm going to probably wait until 2023 because they always have some couple kinks and stuff the first year. Yeah, they do. The pellet stoves, Curtis, they get super hot super fast. And being my house is so well insulated, I don't need to leave it on for very long. It'll just trap the heat in here. So I'm looking forward to it. Yeah, Sergio. So you were referring exchange to a different currency. I don't do foreign exchange. I only own U.S. dollars, and I think right now we saw a huge dip in the U.S. dollar because of all the printing. And I don't think I outwardly said you should be buying U.S. dollars, but I think if you have the money is you can buy more US dollars right now because it is getting devalued. And in the long run, it should go back up, if not much higher, because the demand for the dollar hasn't changed. We talked a little bit about this last week, where 70% of the world still use US dollars, and a roughly 20 to 25 trillion dollars is in debt to the United States. So it's not just the U.S. economy that's using U.S. dollars. The world economy uses a ton of U.S. dollars too. So we should see that value continue to go up as demand goes up. Again, I'm not a currency trader, and I would not even pretend to let you know that I know what I'm doing when it comes to that. But macro level wise, that's what I see. The price I pay for my 2-bed, 2-bath in Beaverton is the same price someone would pay to rent a room and stuff. It's true. My buddy's living down in San Francisco right now. He's paying $3,300 a month for a 1-bedroom studio, which is insane to me. Insane. 7 years. That's awesome, Brooks. I love entrepreneurs. I love talking to entrepreneurs. Are you going to open up a new location, or you got just one right now? I have not climbed in Bishop, Curtis. I've heard of it, but I haven't climbed there. You ordered the triple motor version? Jeez. You put the $100 down? Which is why. Mark asks, Kai, what age do you plan on retiring? 50s? Mark, retiring is not complicated, but I see it very differently. Retiring is what I consider that you don't have to work for the man, or you don't have to work for a company. To answer your question, I probably will never retire. I'll always be working in some capacity. If I wanted to stop working altogether right now, I could. But the thing is that I generally have fun doing this just as much as I do my rebuild projects, my construction projects, real estate rentals, that stuff. It's not because I have to do it. I genuinely enjoy it. I enjoy taking money like $100,000 and buying something and then turning it into $500,000. Like, that generally is fun to me. I know it sounds kind of sick, right? But I'll be doing that as long as my body, my mind allows me to do it. I don't think it's good to truly retire and just sit back and take photos of the sunsets, So, but by now though, it's kind of nice. It's like retirement to me is like I think everybody should be building a life. I shouldn't say this. It sounds really, really forward projecting. But for me, I believe that I should always be living a life that is as close to my ideal retirement or perfect life as I can. Like, just so every day is a great day. Because I think a lot of times what happens is folks, and I'm totally guilty of this too, is like, someday I'll live like this. Someday I'll go here. Someday I'll be able to eat like this. Someday I'll be able to drive that. And it's clear that you can't have all of it at one time. But if you can get little wins over and over again, and you start moving closer to that, overall, it starts to add up, and it adds up fast. So, for example, and I use this example, I'm not saying it to like be braggadocious or anything like that at all, because you got to remember, like I said, I drove beater cars my entire life. Basically, I had one nice sports car for about 6 months, and then I sold it. But I've had beater cars, but now I have a Tesla being charged in the garage. I have this great view of a lake, and I see a sunset literally every single day that I live here that goes right over this hill, right? I have a big picture windows, 180-degree view of this sunset every single day. And I can sit and eat dinner and watch the sunset through these 4 giant windows. You can see the windows in I think it's on my Instagram. And I'm not saying that to be braggadocious, but it was little tiny steps that I wanted a certain type of life to live. So while I work and I build my real estate or whatever it is that I'm doing, I can do it being very comfortable and happy, whether it's a Tesla, whether it's hanging out with friends, it's surfing, it's traveling, or it's sitting down and eating dinner, watching a sunset. So I don't have to wait until I'm 65, 70, 80 to have this vacation home or retirement home where I can go and watch a sunset in Mexico. Does that make sense? I just feel a lot of times people think of like retirement as like, on a Mexican beach watching sunsets. Whereas I'm like, I've been doing it since I'm 30, watching sunsets from my living room. And I think that's just a metaphor for other aspects of life. Am I rambling? I feel like I'm rambling. I rent an apartment. I'm just trying to fill the other room, but so many people left Berkeley. It's been hard to find any kind of qualified renter. Yeah, right now it's super, super tough. That's crazy. How are people trying to rent an apartment without having a job? Retire early and often. I like that. Okay. House tour part 2 next week. You know what? I will do a house tour once I'm done with what I'm doing outside. It's taken the rain. It's June, middle of June, and I have so much rain here. It's just really tough. So like a little insider baseball again. So in construction, when you have to rent heavy equipment or you rent like big earth moving equipment or whatever it is that a little trick of the trade is that you rent it. They have 5-day-a-week rentals basically, right? So when you rent for a week, you keep it for 7 days, but you only pay for 5 days. So when I rent something, I hold it for like 5 or 6 weeks. I'm essentially getting weekends for free. Okay. So I calculate that into the schedule. So if I have 7 weekends for free, that's 14 days. That's 14 extra working days. Does that make sense? That I don't have to pay for, that's already including the price. The thing that's really messed up with this weather, and that's why you see me jumping back and forth on when I do these live streams, is that the last 4 weekends, it has rained. So I've tried to go out there and work and, get some work done. But out of 8 days, I've only really had the equivalent of maybe 2 or 2.5 working days because it's been raining so much. And so what that does is it tacks on to the cost of the project because I don't have those days. So now if it keeps raining each weekend, I've got an extra, let's say it's even an extra 8 days at freaking $300 a day. That's an extra $2,400 I have to pay out. Anyways, it's rough right now. I planned this project so I'd have good weather, and it's been about 50% rain, 50% clear weather, which is tough. But life's still good. I really can't complain. That's me being just kind of a negative Nelly in the moment. They try to negotiate their rent. I think that the first wave of the shift in the Bay Area, lots of people who are now working entirely remotely are making San Francisco money, but realize they can live somewhere much cheaper. Yeah, that's true. All right, you guys. I love you guys all. The 13 of you guys are still here. You guys are phenomenal. I can't believe you guys stayed here this long. But other than that, hit me up. I'll see you guys next week. Give me ideas for companies that you guys want me to invest in or topics that you guys want me to talk about. But thanks so much for watching. And I'm sorry that I went for 3 hours. Love you all. Bye.